Federal Reserve is expected to hold interest rates steady for now, with some predicting we'll see them make the first cut later on this fall. Morningstar economist Preston Caldwell says the Fed, well, quite frankly, they've got their work cut out.
Our inflation forecasts have headed up. We expect inflation to average 3% this year and 3.2% next year. So after several years of inflation coming down and getting closer to the Fed's 2% target, it's now likely to head up a little bit again. And that may be just purely a temporary phenomenon, but there's risks that inflation could become entrenched in the economy, and that would be much harder for the Fed to deal with.
You know, it's just a few years ago where the Fed was in fact calling inflation transitory, and it's still been a talking point ever since then. With inflation staying sticky and interest rate cuts still up in the air, not knowing when or, what capacity they're going to happen, are you guys making any adjustments right now in plans so that clients can protect their money?
Yeah, I mean, we're looking at what options that we have available. I mean, there's a, I don't want to say plethora, but there's a good bit of solutions that we can utilize where we can lock in higher rates, and we can have the liquidity. That's the key thing. I mean, we're utilizing not even CDs. We're actually utilizing money market accounts because we want to make sure we have the liquidity. Mm-hmm. And now the rates have gone down roughly 1% since about a year and a half ago, almost a year ago. And but look, we're still using it as a tool because if you go shop around for CDs, they're paying a lower rate. The one thing that we don't want to do is have a lockup period where we can't access the money, where we use the money market account, and if somebody calls us on a Monday, we can have the money in their account on a Wednesday. So that's the key thing that we're looking at, is we want to make sure that we have liquidity with the tools and strategies that we're utilizing. So as far as they're getting principal protection. Now we also have to look at what is the purpose of their using the money for. So whenever we're looking at creating income streams, we want to make sure that we're structuring it the right way, using the right vehicles, using the right models that have a very low risk whenever they're using this to create supplemental income. But bottom line, we just have to look at the big picture goal, their risk tolerance, to make the proper recommendation. There has been a lot of people going around offering, because we come across this a lot, is where someone gets sold a guaranteed income annuity, which if you've been listening to the show for a while, I'm very much against those.
Right.
Locking up your money, tying up for some fictitious, interest rate value that they apply to your account, but it's not liquid, and it's a calculation that provides guaranteed cash flow through a rider that you're paying for. And so a lot of people get into these things, but one thing I do see a lot of, and need to make sure people are aware of it, is we have people that come in that have these, that it's the majority of their assets. I had a gentleman that came in here a couple weeks ago, and the majority of his investments, I say majority, I'm not talking about like 40% majority. I'm talking about 85% or more majority.
Oh, wow.
Of their total net worth is tied up in a guaranteed income annuity. Well, they're not happy with it. It's not performing. They have to wait 10 years more than likely to get the, the bigger benefit, and the math just doesn't make sense. So the thing is, we have to look at what can we do to help them get out of it. Paying in these cases, a lot of these things have, very, very high surrender charges. I had one guy that came in the other day, his contract, he had to keep it in place for 17 years before he can liquidate the entire thing without paying a fee, a surrender charge. So we actually partnered up with a litigation attorney that helps people in these situations, and people that go into certain types of life insurance policies that were sold incorrectly, and even the agent lied on suitability. So we help them make a case for it. We get them in contact with this specific attorney or a consultant that could help them move their money out. So we have to look at what is the big picture. There's a lot of people going around offering to feed you a steak to do an annuity pitch. I would an annuity in the form of getting a guaranteed income, paycheck. There's certain things that we use to utilize for our soon bucket, but as far as a guaranteed income annuity, I would stay away from. Or even variable annuities. They're just so expensive, and what happens is a lot of these things people use an illustration that to sell even these beta indexes, these made up indexes, and there's a lot of them out there, and they all do not perform. There's one or two that I've seen over time that actually has done very well, like real returns. but most of them it's bogus. And some of them they're even offering, the agents try to sell you on this specific beta index and offering probably like a 200, 300% participation rate. But you got to keep in mind, Chris, what is 2 or 300% of zero?
That's zero.
Still zero.
Yeah.
So the thing is that the likelihood of you making money is slim to none and slim's out of town. So, we have to be very cautious on what we're putting our money in and understand it. Whenever you're dealing with an income rider or guaranteed income, it comes at a cost. It comes with a restriction. It comes with handcuffs, and you have to be aware of it.